So while you were at Credit Suisse, what was the purpose of all your analysis? Like, what did Credit Suisse do, and uh, how did your work impact Credit Suisse? But also, how does your experience at Credit Suisse impact your investments today, and how, like, what can other people learn from that? Like, first of all, how would you go about analyzing a stock?
Oh, so many things there. So I guess
Yeah.
in terms of personal history and stuff, I guess that's where I am starting to get a little more like I want to be private about my life. But in general, I guess we were valuing the companies for accounting reasons. So, you know, lots of companies are public companies. They need to make sure that their private investments are worth what they say they are for investors. It kind of comes full circle for that one, and you know, if something's gone down a lot, they need to report it as a write down, or if something goes up. And then there's also all sorts of random legal things to know whether companies are worth more or less for various contractual obligations, let's call it. And what was your last question?
How would an average person begin to start analyzing a stock? Because as far as I can tell right now, people just seem to really be attracted to buzzworthy stocks, newsworthy stocks, meme stocks. They look at social media, they look at headlines and things like that, and it's really just kind of a shot in the dark. It doesn't seem like people are really doing fundamental analysis, qualitative analysis or anything like that. So how would you even begin to start doing that? How much time should you dedicate to researching stock before deciding whether to invest or not? And
Yeah, I mean, I think that's really complicated. But to simplify it, I'll go back meta, and I'll be like, most people have no place investing, right? Like, I think vast majority of people, at least according to the statistics I've seen about people living the paycheck to paycheck, if you're watching this, just turn it off right now. Like, get better at your job or whatever future job until you retire. If you just save money, you'll probably be better than a lot of people. That's already first of all, right? Second of all, okay, if you've got a lot of money, yeah, contribute to your 401ks if companies have it, or the equivalent. Maybe look into your IRA accounts, and then what should you invest in? Just like most likely a large index like the S&P 500 for the US or for any person is probably pretty good. It's gonna average, call it 7% a year for your lifetime, and like we said, we're already better than a lot of people if you even have cash in the bank for a few months. So if you now have cash in the bank for a few months and you have money for investments, and it's just gonna average 7% for 30 years, that's that's three doubles. That's 8 times your money by the time you retire on your initial investment. So that's already great right there. So any incremental on top of that, we're going into, professional or hubris territory, right? You are either doing this all the time, thinking about it, or just really passionate about it. There's nothing wrong with that. But then you're also allocating smaller amounts of money. And so then you can look at a whole range of different companies. You can, I would say, I kind of always have liked the advice like a professor of mine told me in school, in college, that like, and this is kind of paradoxical, I guess, but to start kind of investing early, but a small amount. So like in college, you likely don't have a lot of money, but maybe it's good to invest a little bit of money, not whatever amount of savings you have, but I don't know, $100 or something, or like the way I did it, which I didn't get into before when I was studying all these stocks in college, but I was like, I don't have any money, so I just did virtual stock exchange. So
that's paper trading, right?
Is that paper? Okay, I guess it's not paper, it's virtual, but I see what you mean by paper trading now.
Am I getting my definitions mixed up? I thought paper trading was using fake money, but using real world data and basically like
we mean the same thing, but I don't call it paper trading because paper trading, I think back to the old days of stocks actually as pieces of paper. But yes, okay, so it was all virtual. It wasn't real money, and I would say there's also a discipline to that, right? Because and we've played poker before together.
Right.
There is this inclination for people when it's not real money to go into this gambling hysteria, like, oh, who cares? I'll just put it all in one stock, or I'll just go all in on a 7-2. Like, that's idiotic, right? If you actually want to get better and you want to improve and save up for retirement one day when you do have more money, you have to treat it seriously. You have to say, okay, these are companies that I think are good, and you likely won't have great strategies, right? You likely won't pick great companies, or they won't be good ideas or whatever. But like, that's the point. That's the point, is like, you take it semi-seriously. I know nothing's as serious as real money, because it's like, wow, I made this $10. I put blood, sweat, and tears into working for these $10 or $100, and if I lose it, I feel so bad. But like, if you can get as close as you can to that virtually or paper trading life, then it's like, okay, I thought this company would do well. Like, why didn't they? Like, I thought buying whatever company would be great. How come it didn't work out? Analyze like what happened, and perhaps why. And you still might be wrong, right? But that's the iterative process. That's the start of it. And I thought that was useful for me, because I tried to treat it seriously. I was like, I think these are good companies to buy, or these are good companies to short. And, but everyone I saw around me, everyone in the class, was just thinking about it at a very short-term fashion. Like, what sucked about it was only for a semester, right? So at the end of the semester, like, who gets the award, right? It's actually really bad. Although the professor gave us this advice, he also had this virtual challenge. And so at the end of the semester, he's like, oh, who won? It's the person that did the best and the worst, right? And like, well, is that really useful? Like, that's kind of bad incentive.
Meaning the winner was the person who gambled the biggest and won, and the loser was the person that gambled the biggest and lost.
Well, not necessarily, but yes, that could easily happen, right?
Yeah.
And so, but he also did have this other caveat of, you notice he did both the best and the worst one. And the best, most people would be like, oh, well, it's because they made the most. But like, made the most how, right, is like what we're getting at. Is a big question. Like, it may be like they picked 100 different stocks and, well, they did amazing on all 100, right? That's certainly something to be said for it. But yes, if they put it all in one company and it just happened to have some surprise that no one predicted or couldn't be predicted, and you got the most, that's kind of useless. It was just luck. But the other side was what I thought was kind of interesting. He's like, actually, don't forget about these people that did the worst, right? Much like I was saying before about, like, you should go on those sites where people actually post how they lost all their money. It's like, you can learn something from these people, right? What you learned is what not to do. And that's really important in stocks, right? If all the person did was gamble all their money and they lost it, you can be like, okay, that's also a possibility. I see that a person got number one because of that, but they also got last place because of that. So then you get thinking like, oh, okay, well, maybe this isn't the most sound strategy. Or they could have lost because they bought, I don't know, a particular sector or certain kind of companies or something. Like, you can get some information from that. And so I think that's kind of interesting. And that's something I think I would recommend to people who don't have any money to invest. Like, you just play money and try to take it seriously and actually try to learn and get better and see what happens. Because at the end of the day, you can't even really gauge if anyone's a good investor for, like, I don't know, 10 plus years, right? Like, I can't even say if I'm really a good investor or not. Like, I think I have to wait another 10, 20 years just to see, like, if I'm any good. And then by then, it's kind of too late, right? It's hard to say, like, oh, hey, Conway, you should have done this 10, 20 years ago. It's like, oh, well, I didn't know.
Hindsight is 20/20, for sure.
And so it's kind of a time kind of venture, and so that's what makes it difficult. But it rewards the patient and the people with good temperament. I hope that helps in terms of, like, what to do. But
it does.
The main resources I have that are good at watching a bunch of people talk about investing, like Buffett or his ilk, or reading books about them or other similar investors, I think in general are pretty good. Like that's where when anybody wants to talk about investments after they fulfill the criteria of savings and 401k stuff, is like, okay, start looking at Buffett and the kind of stuff he does and talks about, because I think they make a lot of sense. And then the rest is enjoy the rest of your life. You're likely not going to have investing as your sole life passion, right? So your investments are supposed to be there and it's supposed to compound over 30 years, but the rest of the time you can enjoy working on something else that you like. Hopefully it's your career, and you're also going to make more money that way initially, and then you'll get better at your career and you'll make even more money, and then you can save more and invest more, and it all works together. So like you're happy with what you're doing because you're getting better at a craft that you like, and you can excel at that, make more money there, use that money to invest so that eventually one day when you can no longer pursue that craft for whatever reason, then you can live off a little bit of your savings and investments.